We are proposing Microsoft to acquire a 20% interest in Share Incorporated, a California-based mobile payment company that began in 2009. Microsoft's mission and strategy is to build best-in-class platforms and productivity services for a mobile-first, cloud-first world, and we believe that Square is a growing company who aligns closely with this mission. Since Square provides both products and services, acquisition of Square would bring a new type of growth through their service revenue and an increase in Microsoft product sales, which would benefit Microsoft Corporation as a whole, who is seeing an increasing growth in their service revenue and a decrease in their product sales. In addition, we believe that with the backing of a large technology company like Microsoft, Square will be able to continue to grow and expand their business even further. Information on Square, our proposed deal details, and the synergies that this would bring to both firms are included in the slides that follow.
Square Inc. develops and provides payment processing, point of sale, financial, and marketing services worldwide. The company combines well-designed software and hardware that enables sellers to turn mobile devices into payments and point-of-sale solutions. They also offer various subscription-based services and tools for businesses. All of these products are available in the United States, Canada, Japan, Australia, and the United Kingdom.
Square completely reimagined what it meant to take credit card payments. Before Square, it was illegal for non-registered merchants to accept credit card payments. Registering was a costly and difficult process that most small business owners couldn't afford, forcing them to rely on people carrying cash. Square was an innovative and necessary solution to this problem. The company's key to success was their easy-to-use, integrated hardware and software solution that was completely distinct from anything else on the market.
Square offers a constantly expanding variety of products. The following are some of the most popular. The Square Reader is their original product. This small device plugs into the standard 3.5mm headset jack of a smartphone or tablet. It works with the free Square point-of-sale app to allow anyone to take payments on their smartphone or tablet. It can read all types of credit cards, and transactions can even be entered manually. Square Register is a point-of-sale software system aimed at replacing traditional credit card terminals and cash registers. Square Register combines payment processing with point-of-sale functionality like itemization and inventory management. Square Cash allows person-to-person money transfer through the Square Cash app or email. Square Capital offers business financing to sellers using Square. These loans go directly towards growing the small businesses that use its payment systems, helping them to expand their businesses. The loans are deposited directly into the seller's bank account and are repaid with a fixed percentage of daily card sales. This means that the businesses pay more when they're doing well, yet don't have to pay as much when they're struggling. If the money is invested wisely, it should result in an increase in payments volume to Square from the businesses as they grow. Square Payroll is a tool for small business owners to process payroll for their employees. And Caviar is one of Square's acquisitions. It is a restaurant delivery service for popular local restaurants. The company started in 2009 when co-founder Jim McKelvey was unable to sell a piece of his art because he couldn't accept credit cards. This was the inspiration for Square. He and his friend, Jack Dorsey, founded the company together, and their first app and service was launched in 2010. The name Jack Dorsey may sound familiar because he is also the CEO and co-founder of Twitter. In November 2015, Square had its initial public offering on the New York Stock Exchange. Square has an interesting yet simple way of doing business. Square provides its magnetic stripe card readers to sellers for free, but charges $99 for the Square stand and $29 for its chip-based Square reader. The app itself is free. There are no monthly fees or setup costs for this payment processing technology. Rather, for every credit card transaction, Square charges a fee of 2.75% of the value of the transaction. For every manually entered transaction, they charge 3.5% plus 15 cents. However, Square does charge monthly fees for its subscription-based services. Square has a dual class structure for their common stock in order to concentrate voting control within stockholders who held shares prior to their initial public offering, including many of their employees, directors, and their affiliates. This is their Class B stock. There are 10 votes per share, and Class B stock has approximately 89.3% of the voting power of combined outstanding stock. Class A stock is what's traded on the New York Stock Exchange and has only 1 vote per share.
As would be expected, we looked into the financial health of Square in deciding that this acquisition would be in the best interest of Microsoft. We have included a link to Square's financials and 2016 year-end shareholders report in our supplemental handout. Having undergone extreme growth in recent years, Square has been operating at a net loss and reinvesting funds to grow the company. The graphic above shows a decrease in loss as the company achieves the growth it needs and moves closer towards earning a positive net income. Investing in Square at this time would prove beneficial to Microsoft financially, as Square is nearing the pivotal moment where its growth will start to pay off in the form of net income, which will flow through directly to Microsoft as an investor. Square has greatly increased the size of its balance sheet, further reflecting this pattern of growth, and this has not been done through the addition of debt, rather than by investing earnings as stated above. Square's growth is due to new short-term investments and current liabilities in 2016. By investing their growth through their own earnings and not debt, we believe that Square is financially sound and will begin to see profits in coming years. Microsoft would see a direct benefit as a stakeholder in the company as a result of this.
As mentioned earlier, Square's rapid innovation in the mobile payment and payment processing would fit perfectly in line with Microsoft's mission and strategy to build best-in-class platforms and productivity services for a mobile-first, cloud-first world. And upon analysis of the financial statements of Square, it becomes an even more appealing target for big technology companies such as Microsoft. In the past year, Square's asset accounts have all increased by a fair amount, but especially their cash account, which more than doubled over the last year. This strong cash position, which is well above the company's current liabilities, is a positive sign of growing financial strength. Over the past 2 years, Square's revenues have also continued to grow, and at a faster rate than the expenses that they are incurring, which is another positive sign of financial strength. And finally, Square is investing more and more capital each year into product research and development, which goes to show the company's commitment to remaining a leader in innovative mobile payment technology and services, an industry that Microsoft has yet to fully tap into.
Based on our knowledge of Square's background and where Microsoft stands financially, we propose a one-time acquisition of 20% of Square Inc.'s Class A stock at a price of 85% of stock closing price on the date of acquisition. Because Square has recently lost its partnership with Starbucks, its revenues will take a hit in the coming years relative to the past. Additionally, Square is a technology firm that we believe may be overpriced as people excitedly head into the new age technology. Thus, we believe that a discount of 15% per share will more accurately capture the value of Square as a whole. To finance this deal, we propose that Microsoft use cash for consideration so as not to add any additional liability to the company. Microsoft has a decent reserve of cash, reporting over $6.5 billion in cash and cash equivalents as of June 30th, 2016. We suggest that Microsoft finance this deal by paying 50% of the amount with cash they currently own. For the remaining 50% of the purchase price, we propose that Microsoft sell some of its short-term investments and use the consideration received from those transactions to pay for the rest of the acquisition of Square shares. Furthermore, Microsoft has steadily added short-term investments to its portfolio in more recent years and has a sizable amount of assets in this class. Given the amount of Microsoft's short-term investments, we recommend that the deal be done strictly through cash to avoid adding any liabilities to the balance sheet that would be a larger risk to pay back in the future.
In this acquisition of 20% of the shares of Square, the separate incorporation of Square will remain independent since we are only acquiring a percentage of shares and not the whole company. This will be a one-time acquisition rather than a step acquisition of shares because Microsoft has the capital available, half from their current cash account and half from the sale of short-term investments to make the purchase all at once. Once the acquisition is complete, there will be no intra-entity transactions of inventory or anything that will occur between Square and Microsoft. However, Microsoft's devices are compatible with Square's devices, and the two devices may be sold as complementary products or with a discount on Microsoft products for Square customers. Since 20% is a non-controlling interest, the equity method of valuation would be used for the valuation of the assets on the date of acquisition of Square. By purchasing only 20% of Square shares, Microsoft will have an influence over Square, but not full governance of the company as far as decision-making.
Microsoft's purchase of a stake in Square will result in synergies that have the ability to benefit both companies. With this acquisition, Microsoft can focus on developing devices that are easily compatible with Square products. For example, having the software needed for Square already downloaded on a Microsoft Surface reduces setup time for a Square user. Also, Microsoft engineers can work directly with Square to simplify the record-keeping process. One way to do this would be developing a connection that automatically uploads the information processed from payments on a Square device to the software used by the company for record-keeping. Thus, this would eliminate a step in the process and has the potential to reduce errors and misstatements. In addition, some smartphone manufacturers, such as Apple, have stopped using a headphone port on devices, which is where the basic Square devices are attached. This puts Microsoft in an advantage because the headphone port is still featured on most products, ensuring that Square and Microsoft products are compatible. This acquisition also addresses one of the current challenges for Square, which is that it is not a standalone product. It must be plugged into another device such as a mobile phone or a tablet to function. Working with Microsoft directly will provide valuable information for Microsoft and Square to ensure products are compatible with each other. Also, Square has demonstrated that it has been constantly innovating since its start by upgrading services and introducing new service lines. For example, Square expanded services by introducing Square Capital to provide small loans to business owners. Thus, it is not a company that plans to remain stagnant in the years to come in regards to service and product development. Finally, 2016 was the first year that service revenue exceeded product revenue for Microsoft, according to the annual report. Thus, it is clear that Microsoft is heading down the path of offering more services to customers, which would make Square an ideal candidate for acquisition based on the variety of services it already provides.
On top of the synergies that would arise, along with their various benefits that would impact both companies, we have noted multiple motives for Square shareholders to accept this acquisition proposal. These first reasons involve the indirect benefits of accepting the deal that would ultimately increase the profits of shareholders. The biggest indirect benefit we found that would add the most value for Square shareholders involves the ability for this acquisition to make up for the lost revenue and lost time spent working to fulfill their deal with Starbucks. This arrangement started back in 2012 when Starbucks was looking to add mobile ordering to their app portfolio, so they reached out to Square to work up a deal which appeared to be a perfect match for these two businesses. This led to the coffee shop giant using Square's hardware to process debit and credit transactions across all stores nationwide. While it seemed to be a great plan, Square had offered such deep discounts for their processing that it resulted in them losing a total of $71 million over the course of 3 years. This huge loss is due to the high payment processing costs stemming mostly from bank fees that Square incurred, which outweighed the discounted transaction revenue Starbucks was producing. With the deal proving to be unsuccessful for Square and the contract recently coming to a close, this created a vital opportunity for Microsoft to come in and help boost their struggling revenues. This boost that Microsoft could give Square in developing their technology and hardware could help accelerate sales and would give the company the growth they are in desperate need of to remain a profitable company and keep their shareholders wealthy. With their IPO being almost 2 years ago, this is a prime time for Square to increase innovation and improve their existing technologies, which Microsoft could accelerate significantly. To further appeal to Square shareholders, we have included in this deal covenants from Microsoft that would allow Square to have unlimited access to the use of Microsoft's data processing software. This would allow Square to bring their data processing in-house, which would save the company money as well as time to ultimately increase shareholder value. Microsoft would also allow Square to offer discounts to their customers on Microsoft's cellular devices and tablets. By offering this discount, Microsoft could increase the Surface user base while offering a large incentive to Square's customers, looking not only for their transaction processing system, but also the hardware to run it on. This deal would allow Square to retain a profit off of these Microsoft product sales that they initiated through their sale of the Square Reader. By combining these two technologies, Square could grow their customer base and accelerate growth, all while generating even more value for their shareholders. This incentive is beneficial to both Microsoft and Square, and we believe that this, combined with increasing revenues after ending their Starbucks partnership, will entice Square to accept this deal.
Ultimately, we believe that Square is a strong acquisition for Microsoft that will bring an increase in revenues to the company. Graphic 1, as shown on this slide and in our supplemental handout, shows that Square's stock price has steadily risen in the past year. Recently, Microsoft's performance has leveled off while Square's stock prices continue to rise. This increase would add value to Microsoft as a stakeholder in the company if it were to continue on this pattern. Having investigated into Square's recent financials, we believe that Square is a healthy corporation positioned for growth. With part of Square under Microsoft, Microsoft will see an increase in revenues through greater use of its tablets to implement Square systems, as well as greater data processing and storage use, as mentioned previously. We believe that Microsoft is positioned to have healthy gains with a partial acquisition of Square Inc., a company who is an innovator in the payment processing world. In acquiring 20% of Square's Class A stock through a cash deal, Microsoft will have significant influence over Square to help guide them into greater growth and development as a company. By integrating Square technology into Microsoft products, sales of Microsoft devices will likely increase as Square's end users implement Microsoft-based operating systems. As Microsoft continues its growth in service-based revenue, Square is a strong technology company that would bring Microsoft a boost in service revenues in a new sector. Microsoft is always at the helm of innovation, and we believe that a partial acquisition of Square is aligned with the overall mission of the company and will bring them increases in revenues through new channels. We thank you for your time today and look forward to a potential future with Microsoft and Square as partners.